All right, welcome back. Let's try that again. I'm Scott Shelley, otherwise known as the Cow Guy. The technical stuff's been sorted out. Let's take a look and see what the overnight markets are doing in your grains. There's a lot of green on the screen. It's going to be Good Friday if you're a producer. Let's start with corn and see what's got that market going on. Up 5.5 cents in that July. We made it through that 460 level, which was pretty key for a lot of producers out there, or a lot of technicians, I should say, and producers. 465 and a quarter's last. We've got a half cent away from the high there. So we've had about, I'm going to call it a 6 3/4 cent range exactly. And we're a half cent off the high of that range. Dees, the new crop is up 4 1/4 cents, making a move towards $5, folks. 483 3/4 is last, and that's a half cent off the high there. All right, moving right along to the soybeans. What did they do overnight? They were higher as well by 10 cents in July. 12.09 is last there, right? That's some good going. 3.5 cents off the high of the day, and we've had, I'm going to call that a 15 cent range. I say that's fair. That's fair to say. November, the new crop, that's up 5 3/4 cents, trying to make it up to $12. There we go. We got $5 and $12 on our sites, folks. 11.93 and a half is last there. All right, let's move on to the wheat in Chicago. That too was higher, 13.5 cents higher. Bingo, bango, chicken mango. July is up to 6.17 3/4, and it's only about just under 3 cents off the high of the day there. Dees, wheat in Chicago, that's 12 3/4 cents better to 6.63 1/4. How about the hard red? That's Kansas City. Let's go from Chicago to Kansas City. Kansas City overnight was up 14 3/4 cents. Another great double-digit gain. 6.51 1/4 is last there, and we're about 4 cents off the high of the day. Dees is up 14 1/4 cents to 6.85. That's 4 1/4 cents off the high there as well. Moving up from the hard red to spring wheat. This is in Minneapolis. 7 1/4 cents higher there to 7.16 1/2. It's a penny off the high of the day. Dees is up 7.5 cents to 7.33 1/2. All right, finally, we did cotton during the radio show, and it wasn't really doing much. We've got a July board that's up 68 points, though. We'll take it. 76.30s last there. All right, let's bring in our next guest analyst. I think it's going to be Brian Hoops, as long as the technology works out for that. And there he is. Thank you very much for showing up this morning, Brian. I know what I think, but I want to hear what you think. Why are we higher?
Hey, good morning, Scott. Well, the chart's looking pretty friendly here overnight. Traded the highest levels for December corn since January the 16th. November beans, the highest level since March 25th. So well over a month in the soybeans and several months in corn. So we're getting a lot of fun short covering, a lot of buying interest coming into this market. Near-term weather forecasts in the U.S. anyway, kind of friendly with water and rain expected to stand in fields maybe for another week as we need warmer temperatures to kind of dry things out, and there's rain in the forecast. Now, in the longer term, 11 to 15 day time frame, we do dry out. We turn to more of a normal weather pattern, but maybe we're going to start talking about a little planting delays in between now and then. I think that the news overseas is friendly as well. The Buenos Aires Grain Exchange yesterday afternoon came out with their estimate for corn production. They dropped it. Now they're down like 9 million tons from their previous estimates that they started off with. So they're at about 46.5 million tons. That's down 3 from last month. But they originally were talking maybe we're going to have a 56 million ton crop in Argentina, and that's not been the case. So harvest is continuing to be delayed in South America. The soybean harvest is only 34% done. The average pace is about 54%. Corn harvest is 25. The average is 34. So we're way behind pace there because of poor weather. And then this morning we had a private sale, 122,000 beans sold to an unknown destination, which everyone will probably rightfully assume is China, stepping in and buying some U.S. soybeans. And that could be a hedge against these prices that are starting to move higher, a hedge against that Argentina soybean production, which is falling further behind. And we're probably going to see some sort of yield quality losses in future reports.
All right, I'll take it. I'll tell you what. Here's what I think. If it's 90% the Fed and 10% what you just said, because
it could be.
Well, the Fed's trying to keep everything together with Band-Aids and duct tape, right? They're going to try to keep interest rates as low as possible, and they're going to try to keep equity prices as high as possible going into the election. Bottom line, they basically said it. And what he had to say, the Chairman Powell on Wednesday, whatever it was, Wednesday, all the days go together now. They're going to keep interest rates as low as possible. That's what he wants to do. He's not going to hike them. He's given the green light to the guys on Wall Street to buy stocks. We had a good earnings from Amazon last night. Shocker to the upside. But the problem is that he is now going to turn his head on inflation. He's going to turn his back on inflation. He's not worried about it because he's going to keep interest rates as low as possible. And in doing so, anything that goes up in an inflationary time, if you're short it and you're short a lot of it, you have to really kind of have a meeting quickly and decide what you're going to want to do. And
we've had commodities like cocoa and cotton and gold and silver that have had huge inflationary rallies on massive fund buying. And I think they are going to look for something that's cheap as an inflation hedge, and they may look at corn and soybeans and wheat as multi-year lows and think these prices are cheap and not want to be short these markets. And we're going to see some fun buying that's going to lift our values.
We're going to get a short cover rally, but not because of weather. It's going to be because of inflation, and that's what I think. I mean, what's going on right now with the Fed is just unprecedented, and this is going to give we're going to have an inflationary problem. Let's move on though. I want to talk about some livestock here. Let's move on to see what we did overnight in live, or we didn't do anything overnight. Let's remind ourselves where we closed yesterday. Where live cattle were higher. Look at this, $2.85 higher, well, $2.95 higher in June to $176.80. Just to remind us where we're jumping off from, right? Feeders, they were higher too. We had August board up $3.47 to $255.22. And lean hogs, I don't know if they got the memo. They didn't really. It was mixed. We're going to go right to the June, though. It was down 50 cents. No big deal. 99.92 is last. Anything overnight or this morning you've heard when it comes to livestock there, Brian?
Yeah, I remember the days when we used to trade cattle overnight. So when you talk about it, I can relate. We used to trade those cattle and hogs overnight. As far as fundamentals, steer weights are down 3 pounds, but it's kind of a moot point. We're still 27 pounds heavier than a year ago. We're starting to hear some cash trade develop, especially in that northern area. That's where the strongest feeder cattle market has been. Cash trade was a couple dollars higher yesterday on a dress basis, kind of trickling in some sales in the southern plains. So we're seeing, a better cash market than what was expected. And yesterday we were talking at this time about possibly a $2 higher opening, and we saw a little bit better than that yesterday. We're not going to see that type of opening this morning, but I do think we opened stronger. We saw a lot of selling coming into the marketplace yesterday after that strength, and so we kind of capped the rally. But at least we have, a confirmation that our beef supply is safe. Maybe we can get back to some normal type of trading here as we get away from some of these fears.
What's the pre-market look like on the machine?
Well, just right now, the 20 to 30 cent higher openings. So much less, subdued compared to yesterday's real volatile session. So I think you try and open higher, and hopefully you can build on that today rather than find funds selling that caps that rally like we've seen recently.
Yeah, it'd be nice to get through yesterday's higher opening too. Those levels. Yeah. All right, always great to hear. It's a weekend, so now you can relax. You can get down the tavern now. I'm sure they got your seat warm for you. Have some breakfast beers and some breakfast. All right. Thanks for coming on, Brian Hoops. He's with Midwest Market Solutions in Springfield, Missouri.
Talk much? Yeah.
No, I don't talk much. Yeah.
We're all
this
like
all
a herd
goes
of
together.
turtles today.
Yeah.